Welcome back, everyone, to another deep dive here on The Explainer. I am absolutely thrilled to have you with us today because, honestly, we're crossing a massive threshold. If you've been following the Crypto Trader curriculum, you know we've covered a ton of ground when it comes to market mechanics and manual execution. But today we're unpacking a really incredible milestone. We're making the leap from that manual screen-staring execution to the wild world of automated systems. Yep, we're going to break down exactly what it takes to build a machine that actually trades for you. Day 25. Seriously, reaching this point is no small feat, so take a second to acknowledge that. Up until now, your trading has probably relied entirely on your own active presence, right? Your eyes glued to the charts, your finger hovering over the mouse, making those high-pressure split-second decisions. But Day 25 is all about cracking open the automation toolkit. It's about taking those exact strategies you've learned and translating them into a format that a computer can execute tirelessly, 24 hours a day, 7 days a week. And hey, unlike us, it doesn't even need a coffee break. It's just a complete paradigm shift.
So that brings us to the ultimate question you've got to ask yourself right now. Are you ready to hand over the keys to the bots? It's a super exciting thought, isn't it? But, it also comes with a tremendous amount of responsibility. Literally letting a machine trade on your behalf means you are no longer making the final call on every single tick of the market. You are fully trusting the logic and the rules that you've put in place beforehand. In today's explainer, we're going to show you exactly how to structure that trust, step by step.
Section 1. The Automation Toolkit. Let's get into building your engine.
Just like a mechanic needs specific parts to build a race car, a crypto trader needs foundational building blocks. And the very first tool in our kit is Python. Sticking with our car analogy for a second, Python is the core engine block itself. It's the programming language where your actual trading logic is going to live. When you're sitting there deciding what conditions actually make a good trade, it's Python that interprets those rules. It's the environment where you write the instructions that basically say, hey, if the market does this, then execute that. Simply put, without this core engine, there is zero automation.
But an engine can't move a car unless it's actually connected to the wheels, right? Well, that's exactly where trading APIs and exchange APIs come into play. You can think of these application programming interfaces as the essential fuel lines and suspension bridges of your bot. Your Python code needs a way to communicate directly with those live cryptocurrency exchanges. The API is basically your messenger. It takes that buy or sell command generated by your Python engine and securely hands it over to the exchange so it can be executed in the real world.
Moving on to Section 2, the workflow. Let's put it all together. Now, just having the tools is one thing, but assembling the machine in the correct order, that is exactly what separates a successful automated trader from someone who just loses money really, really fast. The source material outlines a very specific builder's progression. Step 1 is data collection, because before a bot can make any decision, it needs information, right? You have to feed raw market data into your system. Step 2 is backtesting. Once you've got that data, you run your Python logic against it to see how your strategy would have performed in the past. Finally, if that testing is successful, you reach Step 3, which is strategy automation. So it goes like this. Gather the facts, test the theory, and then automate the execution.
And that brings us to Section 3, the golden rule of safety and risk.
Building a bot is high-energy, super exciting work. But deploying it, that requires a really serious, deliberate focus on risk management. The source presents a pretty stark contrast here. On one side, we have paper trading and backtesting. This is your simulated practice. It's completely safe, allowing you to see exactly how your bot reacts without risking a single dime. On the other side, though, we have live funds. This is real money. And look, if your bot has a tiny bug in its Python code, it can literally drain your account in seconds. It's a vital lesson about managing our risk before we ever even think about going live.
Which actually brings us to a quote from the text that serves as an absolute directive here. Start with paper trading or backtesting, not live funds. I really want to say that with heavy emphasis because it is the ultimate safety inspection before turning your machine on. You absolutely must validate your strategy in a risk-free environment first. Listen, if your bot can't prove itself in paper trading, it has absolutely no business touching your live funds, for sure. All of this leaves us with a really vital thought to take away from today's explainer. Your bot is built, but is it tested enough to trust? You now know the toolkit and you understand the workflow, but the true test of Day 25 isn't just about building the machine. It's having the discipline to ruthlessly test it before letting it run wild. I really hope this breakdown has given you a clear, actionable roadmap for your journey into automation. Thank you so much for joining me today. Keep learning, keep testing, and I will see you next time.